Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend, the independent speculator, Lobo Tiggre. Lobo, thank you so much for joining us today.
Thanks for the invite. Should be fun.
Well, it's great to have you, especially for this live stream here. I did want to discuss what we're seeing in the metals markets. You have famously been Darth Silver, but it sounds like you're maybe more bullish than ever. Your perspective on silver breaking up above that $33 level and really into the 34 as we've seen in the last couple days.
Sure. It'll make me sound like a Johnny come lately. Oh, silver's up, so Lobo turns bullish. But it's not silver hitting a 12-year high that's got me bullish. It's silver acting resoundingly as a monetary metal should. Not like copper, not like oil, tracking gold, and doing so with more gusto lately than it has not just in recent years, but even this year. This year, it has been tracking gold more closely than copper. That may not sound terribly stunning to your audience or mine, but last year it was tracking copper more closely than gold. So to see it acting as a monetary metal should, and seeing it do so even more enthusiastically, let's say, recently, yeah, that matters to me. That is new data. That is a change in the marketplace that I'm responding to. But I should clarify that the Darth Silver thesis was never a bear case against silver. It was primarily about whether or not silver goes back into circulation, assuming gold does. Um, and so, and the quick answer to that is in a modern world with digital transference, I don't think people are going to go around with medieval coin purses full of gold and silver coins, on their belts, unless we're in a Mad Max type scenario. But assuming civilization doesn't collapse, I think gold gets transferred, goes into circulation as money should again, but transferred electronically. And in that case, you don't need silver or copper to make change. So anyway, but never mind. Yes, I am actually more bullish than I have been for quite some time, maybe ever. Ever is a long time. I was pretty bullish in 1979. um, but yes, it's acting as it should, and it's very encouraging to see it. Wake up. We'll see how this latest breakout lasts. If it's just a short-term short squeeze, like this latest little hockey stick, that may not last. But even if it goes back to sort of just tracking gold the way it should, then that's very, very bullish. Now, I have to say, sorry, and I won't go on forever, but on this subject, I have to say that the jury's still out on how silver will react if I'm right, assuming the hard landing scenario becomes undeniable. If, the brown stuff hits the fan, the next non-farm payrolls, instead of being another blowout jobs report, is really disappointing, and people start talking hard landing again, then it'll be interesting to see how silver holds up. If that does not wax silver and it keeps going up with gold, that'll be very good. Then that will be close to an all clear signal for me. Don't worry about the industrial side. Treat it like gold, and if you're bullish on both, and just go for it. But right now, I think that is an open question. I am very bullish, but near term, I'm still skittish about what happens if the economy surprises to the downside.
I think that is the real question because silver is also an industrial metal. Now, gold really being mainly a monetary metal, we don't really have much resistance above levels, obviously because we're at all-time highs right now. So what is your outlook maybe going into the end of the year? It seems like it's very maybe hard to predict something that just keeps running higher to all-time highs.
Sure. Well, I'm not a technical analyst. I'm a fundamentalist. And on a fundamental basis, I look at the world and I look what's happening, and it makes me just very, very bullish on gold. If we play with the charts a little bit, if you connect the previous all-time highs on the charts, 1980 and 2011, we've already broken north of where that line would be where we are now. So you could say it's overbought on that basis, peaking, connecting peak to peak. But connecting peaks that are 50 years apart, I'm not sure how serious a quantitative analysis that is, call it technical or not. Um, if you Another fun stat is if you look at the percentage gains from last high, last peak to current peak, it would take like $3,800 gold to get to too high compared to that rise if it were to repeat. But why should it repeat? In the 1970s, we came off a gold dollar peg. There was no gold price. There was no exchange ratio because the dollar was defined as a certain amount of gold. And, that clearly suppressed the market, and there was a quote spring action afterwards. That's not the case in the market now. So I don't think that's reasonable, but it's kind of fun to look at, like, well, what happened last time? Well, the new all-time high before was twice as much as the previous one. It's kind of fun. If you look at, stochastics and RSI numbers and things like that, then sure, gold looks overbought. But looking overbought doesn't tell you when it should roll over. So this is a pure crystal ball statement. I don't know what's going to happen. We are in uncharted waters, but I'm not nervous about gold now. I'm just, everything I see on the table, all the reasons to like gold are there. It's even getting to become a bit of a crowded trade. Like the mainstream is catching on. Financial people who couldn't seem to spell gold, it's a four-letter word, but anyway, even these people on Bloomberg and Yahoo Finance and so on, they're getting on the gold bandwagon. Yes, that as a contrarian makes me a bit nervous, but not at these levels. This is not a prediction. It's not a forecast. It's just my sense is that when we get over 3,000, that's when things start getting, frosty. That's my worry level. That's not I'm going to sell everything. I'm not worried about gold now, but once it gets over 3,000, then I'll start worrying more about, this feels a bit rich.
Definitely. I think that's, obviously a psychological level as well. And we've just seen such an increase in gold and silver this year, 30+% in both the metals that, a lot of people are wondering, should they start thinking about selling? You're saying that, you're not thinking about selling at the moment, it seems like. But for those also looking to get into the market, you mentioned how gold is not at an all-time high if you inflation adjust it. And also you've mentioned how silver isn't even at an nominal high. So your take then on people who don't have any metals jumping in at this time after we've already seen this increase this year?
Right. Well, let's separate the metals themselves from the stocks, because bullion, it's not a speculation in my view. It's not even an investment. Gold is money, as JP Morgan famously said. Everything else is credit. It's my rainy day fund. It's my insurance, my savings, whatever you want to say. Actually, no, I generally think of it as my savings. When I have long-term savings, I don't even have a savings account. When I have money I want to sock away for long-term, I buy bullion. And at that, with that in mind, I don't care what the exchange rate is with the dollar. If I want to have more gold than dollars and save in that way, then I just buy. Now, obviously, I'm not going to do that on a day where gold's going like that. You buy the dips. But I'm not worried about 2,700 looking expensive or something like that, because it's not what it's about. It's about savings. And if you look at the very long-term chart, I like to say, X marks the spot. If you look at the 50-year chart, or since 1971, when the dollar became a floating abstraction instead of having any tie to reality, the value of the dollar has gone down and the value of gold has gone up. It's a bit of a curvy X, but it's absolutely an X. And in many ways, that's all you really need to know about gold and silver. Basically, it tells you that, what we all really know to be true about fiat currencies. Now, the stocks are another matter. If I'm trying to speculate to make money, it's a different question. And clearly, when something hits a nominal all-time high or a 12-year high, that's a little bit tough to go out and tell people, oh yeah, buy $35 silver, you'll be fine. I'm not going to be that irresponsible. I'm not going to tell people ignore the price, just go buy everything. There are still bargains on the table on a relative basis in the gold and silver space. The mining stocks have been underperforming the metals for years now, and that is starting to turn around. They are definitely showing life. So no, the stocks are not dead. That's a good thing. But they're not, many of them are not at all-time highs or 12-year highs. Some of them are at 52-week highs, but some are not. You have to be choosy. I wouldn't buy an index. I wouldn't buy a junior miners ETF or something like that. But selectively, there are opportunities out there. That's what I do. I'm a due diligence guy. So of course I'm going to say that. Maybe I'm talking my book, but that's what I think. I think that selectively, if I had money to deploy and I was late to this market, I'd probably wait for the next dip on bullion. But on the stocks, there are, I think, great buys out there today.
We have some viewers' questions here. One of the viewers wants to know, why would you be concerned about $3,000 gold being maybe too frothy, or if it's too much in the mainstream at that moment, given how much the U.S. is in debt, right? $36 trillion. So your perspective on that?
Yeah, well, my perspective on that is $3,000 gold is, a target for the next few months, whereas the U.S. debt is a perspective for the decades. I mean, I remember as a lawnmower kid back in the 1970s saving my money in silver Morgan dollars back in the day. People were talking about the national debt, and it was this big emergency, the national debt. It was part of the thesis for why people were buying gold and silver, not just the inflation. The national debt was a big scare. Okay, that was more than 50 years ago, and the national debt has still to blow up in people's faces. And you could say, looking at what's happened to the dollar since then and what's happened to gold, that it has blown up. But as an investment thesis, as a decision maker for what stock am I going to buy today, the national debt is just not a variable for me. It's a constant. It's a constant worry, not a variable worry. So yeah, I get it, but this is one of those things where, to quote our good friend Rick Rule, you never want to confuse with the inevitable with the imminent.
That's definitely true. And I think we can maybe get a bit confused between the two, because if something is inevitable, then in our minds it sounds like, oh yeah, of course it's going to happen, but as you mentioned, it's not like it's going to happen right now, and they can kick the can down the road. We do have a few other questions. I did want to also
Sure.
get to uranium here, but one of the questions has to do with the purchasing power of metal, and you mentioned how gold and silver bullion you should see as savings, first and foremost. So the viewer says, I'm not concerned about the price of silver, but they are concerned about the purchasing power of silver in a collapse scenario. Your perspective on that?
Well, it depends on what you mean by collapse scenario. If we're talking market crash, sure, everything gets whacked. That's a buying opportunity for people who get it. It's very short lived. And I must say, in the last market crash in 2020, gold came screaming back in a big V shape, and silver fell off a cliff, and then did the, I'm falling and I can't get up thing for quite a while. So, the industrial aspect is a concern there. If that's what the viewer means, then yes, I think that's a concern, not long-term concern, but that concern equals opportunity too. If you have cash to take advantage of that, should the market make that mistake again? I may not. We may get a V-shaped thing. I'm not going to sell silver in anticipation of a possible crash, because it may not. The Fed has trained investors that bad news is good news. So the kinds of things that should create a market crash could actually send it to new all-time highs. We're through the looking glass on this. So that's an important takeaway. Do not assume that bad news necessarily means that the market will crash. It might, but it might not. As far as silver's purchasing power, very briefly, there's an article called "In Defense of Hard Money" on our website. It's a free article, and it's a true story about my own experience as a kid buying, silver. One of the things I did in Mexico as a kid in Mexico is I bought old silver pesos, which were, I think, mostly tin or something. They're very light. They were crappy coins, but they had some smidgen of silver in them. And in the year 1999, I was in Mexico and I had a personal meltdown, and I had to sell what rainy day fund is for. I had to sell some of my old silver to literally feed my family. And I was in Mexico at the time, and I took the coins to a pawn shop, and they gave me 1 peso for them. And think about that. This was like 40 years later, with I don't know how many times 2, 3, 4 zeros had been chopped off the peso. If I had had nominal pesos, that would have been, I would have had like 0.0001 pesos. But they gave me 1 peso for each one of my 1 peso silver coins, which were mostly crap with a smidgen of silver in them. So in terms of, collapse or something like that, this is why we buy junk silver. It has purchasing power in case of need. And, I can tell you, I personally experienced the staying power of real money, gold and silver.
Now, when it comes to your outlook and more on the speculative side for investments, there's also uranium. And I know last year that was your top pick, and this year your top pick was gold. But what is your current view of uranium?
I thought you were going to ask me what's my top pick for next year, because the
Oh,
last two worked out pretty well. I'm still working on that. I traditionally announce that at the New Orleans Investment Conference. Um, but so yeah, actually, I think uranium is pretty exciting. The latest is that the AI craze has adopted uranium as the no longer unloved stepchild. To have major tech darlings start contracting for nuclear power is a sea change. It's really momentous, and and the cherry on top of the cake is for Microsoft, that little known small nano cap, right, to to contract with the owners of 3 Mile Island to bring that plant back online. This is huge. I mean, this is the source of the first big nuclear scare. Even though nobody was hurt by the accident, decades later, they've still to find anybody that was hurt by any radiation there. This is really huge. But the interesting thing is that hasn't had an impact on the spot uranium price at all. The stocks have gone nuts on this. There are stocks that were literally at 52-week lows last month that are now at or near 52-week highs, some all-time highs, without spot really having moved much. And long-term contract, of course, is more important, but that hasn't really, done a hockey stick or anything. It's really this AI buzz, I think, that's happening here. So what I'm saying is, this is very bullish for uranium. I'm extremely bullish going forward, but I'm wary of buying any of the stocks that have just done this. Do not chase stocks. So if you're looking for me to pound the buy button, that's just not my style. Anything that's just gone like this, it just makes sense to wait for the next pullback. And by the way, if something has not moved, if all the uranium stocks except for that one stock that you've had your eye on has moved, that's a red flag. Like, what's wrong with this story? Why isn't it moving? That is an important question to be asking yourself. So yeah, I love uranium. I'm looking to add more exposure to my portfolio this week, but I'm not willing to compromise on the value proposition and what makes for a great speculation.
No, I mean, I will just say it is pretty impressive the last 2 years how accurately you have called, your top pick, for example, uranium and gold. What are some of the factors that you've looked at to make those predictions? And maybe we can kind of think in our, maybe predict what is Lobo going to
What
predict
is
next,
Lobo
right?
going to
As you
say?
mentioned.
Yeah. Oh gosh. Um, you know, I'm I'm a spider wolf at the center of a huge web. I have a team now, by the way. This started out as literally like a mom and pop shop with me and my wife at the time. But now I have a whole team of very smart people who are out there, and they have their own networks. I have my own network in the industry from being in this industry for a few decades. But now I have this team that has their own growing network. And so I keep saying I'm not a technician, but I do look at the charts, right? I do look at what seems to have momentum. Mike Oliver's analysis, the momentum structural analysis, that's interesting to me. That seems better than a lot of other TA I've come across. But I also, the vibe, if you will, the constant news flow. I'm always absorbing news, even from, let's say, outlets that I disagree with, because it's important not to be in your echo chamber. It's important to not just listen with people who agree with you. And it's telling when the people that you disagree with start saying things that make sense to you, or they're catching on to things you've been saying for a while. So it's a huge input. I mean, I'm constantly absorbing data. Um, I'm kind of bummed because actually I've trained my guys so well that I can send them out to kick the rocks, and that's my favorite part is to go on the field trips and go underground and look at the sparklies in the the vein in the wall of the tunnel. But now I have guys who are very good at doing that for me. So more and more, I'm the center of this web, and I just get my spidey sense, if you will. I'm sure that's not a very satisfying answer. Ask me again after New Orleans, or if you'll be at New Orleans, ask me, and then we'll see if I can give you a better clue for how I do it.
Well, we always do appreciate your time, Lobo, and really getting your independent analysis, right? The independent speculator. If our viewers are interested in learning more, they can go to independentspeculator.com, and they can probably be the first to hear your prediction for 2025. So, can you tell us a bit about that?
Well, A, I don't make predictions. My highest conviction trade is not a prediction. It's just where I'm focusing my buying. Yeah, I guess the quick thing is we have a free weekly letter. If you sign up for it, you may or may not like it. You may or may not like my thinking. The one thing I can promise is we will not spam you with a flood of daily advertisements. I hate that. So give it a try. Won't cost you anything. And then see whether or not you think I might be a good fit for you as a due diligence guy.
And for our viewers that may have joined the live stream a bit late here, can you give us maybe a wrap up on the precious metal markets, some of the key factors that you're looking for right now? Because it's wild markets out there with gold and silver racing as they have been.
Absolutely. So very bullish on both. I wouldn't say I have higher conviction on gold than silver. I might, on a price basis, silver's still not reaching all-time highs yet. I would say I have a more bullish outlook on higher gains for silver, but I have more concerns about silver volatility along the way because of its industrial aspect. So I have more confidence in gold, but I have mm, my outlook for silver is actually more bullish on a gains basis.
Fantastic. Well, we always appreciate your time, Lobo. Thank you so much, and God bless.
Thank you, Elijah.
Fantastic. We are good. Awesome. Thank